Kathleen, what are we expecting this Wednesday?
We're expecting the Fed to underscore that it is going to do everything it takes to bring down inflation. And of course, the big question hanging over markets is, are you doing enough? And what are you going to do to show us that you are? The inflation report showing that there's been no relief in key categories like food, energy, shelter, even used car prices after falling for 3 months jumped back up again. We heard from Larry Summers, former Treasury Secretary, Bill Dudley, former president of the New York Fed, months ago saying the Fed was risking falling behind the curve and having to tighten more to bring down inflation if they didn't get going. And now we've heard from someone who's been more on the dovish side, former Fed Vice Chair Alan Blinder, saying the same thing. Why are we showing you this chart about consumer sentiment? Because the Fed's job, in a way, this tells us how important it is to bring down inflation. Consumer sentiment from the University of Michigan fell to a record low in May. It's by far and away the worst, even surpassing the great financial crisis. And in fact, inflation expectations over the next 5 years at their highest since the latest financial crisis. So again, this doesn't suggest, even though it shows pressure on the economy, consumers getting more worried, and yes, that probably may increase inflation risk as well. It shows that you have to do something about it. Now, Roberto Perli is a former Federal Reserve Board economist. He says the Fed is already signaled a 50 basis point rate hike this year. The same thing in July. Markets are expecting one in September as well. So he doesn't think they're going to suddenly bring a 75 basis point hike on us this Wednesday. However, he does say they may start talking about it. Jay Powell will surely get asked about that at the press conference. But let's remember two more things. Number one, a balance sheet runoff is starting. It's going to get more and more aggressive. The Fed considers that a certain amount of tightening. And one more thing, Chris Waller, Federal Reserve Board governor, very much a hawk, at a conference at Hoover in May, said that, hey, come on, our impact since 2021, when we started signaling getting more aggressive, already pushed up the 2-year note yield by a good margin. Look what happened just on Friday. I think that's another thing the Fed is considering, something that will help fight inflation. We have to see what happens there. The dots, of course, will get revised from March. Will we see more rate hikes, faster rate hikes, and bigger hikes reflected in those dots for June? That's another big question mark.